Hey guys and girls, welcome to this week's episode of the OBS and Birchy podcast. I'm your host, Nathan Birch, and this is a show unraveling the truth to the facade of the 21st century. We're now exiting the Matrix and waking up to motherfucking reality. Today, we are at the Bella Vista podcast studio, and I'm joined with Hayden here from our investor relations team. Hayden, thanks for coming on.
Thanks for having me. Good to be here.
Beautiful. It's this is our first podcast that we've done. Yeah.
It is.
Hayden's been behind the scenes. He's doing awesome stuff with his investors and creating some cool portfolios. But first time on the show, I guess if you want to give the viewers a little bit of a background and the listeners a bit of a background on yourself and what you do and where you come from.
Yeah, so I was previously doing just residential real estate, so selling sort of $1 million properties, a lot different than we do now. But yeah, doing that for about 5 or 6 years.
Yeah.
But yeah, been working with you for about 6 or 8 months now.
Oh, yeah.
So yeah, really enjoying this side of it, but a lot different than what I was used to before.
Very
in terms of the prices and the rental incomes and stuff like that. So it's a whole new world.
Yeah. I think it's cool. Like, I don't know. I don't know if I've even mentioned on a podcast. This might be a new one I've said anyway. My first job when I quit school, when I finished school, I was like, I want to be rich and I love property and I don't want to go into university. I actually had a university degree that was given to me like a scholarship, right?
Really?
Yeah, and I didn't want to do it. I didn't take it, and I just wanted to earn money. I thought real estate agents are rich. I want to be a real estate agent, and it's a very hard job, right? Weekends, objections.
Yeah.
People put down real estate agents a lot more than what they should, right? Like it's like there's a lot of. I feel sorry for real estate agents.
Yeah, you got that bad stigma about them. Yeah.
But I feel bad because like there's all the crap, right?
Yeah.
And one thing I did realise, there was two things actually. One is I know how a real estate agent works. So in our line of work or what we do, we know how to talk to a real estate agent because we've been in the industry. And the second thing is like real estate agents don't own properties. Like very few of your colleagues would even.
That's true. Yeah, expensive cars and expensive clothes and just quick cash. Yeah.
Exactly. Yeah. We all wear t-shirts. And, you see, you got your nice button-up shirt today for the podcast.
Real estate days. That's right.
But it's very, very different. So, what are some of the differences? Coming over the other side and working in the buyer's agency team and
Well, just cool seeing the different side of. The different side of negotiations, like being as a sales agent working for the vendor, you get all these weird requests and contract requests, and trying to work with the vendor side, but working with the buyers where it's just weird swinging to that complete opposite side, and trying to get the best possible outcome for them, not budging on price, building and pest inspections, negotiations and stuff like that. It's been interesting to learn and very, very cool.
In all the time that you're a real estate agent, you probably wouldn't have seen, we want to put a 21-day finance clause in.
No, never. That's the main thing, actually. Like, even with Queensland contracts, the buyer has so much power than, like a New South Wales contract has.
The same thing in, like, Perth and Melbourne.
Exactly. Yeah, you can pull out and just get your money back and just waste 3 weeks of the vendor's time. It's just that's crazy.
There's a benefit of a buyer's agent there. And I guess, like, some of the deals, I just wrapped up one today for $115,000 for someone. Like, you probably wouldn't have ever. That's like the people's deposit that you'd be paying.
Literally. Literally. That's the initial 10%, initial 0.25% for some people.
Yeah, cool. And I don't know, I didn't even ask you this before the show. Like, do you mind if we talk about any property stuff, like any personal stuff with that? Like,
for sure. Yeah, for sure. So I guess
you became an investor.
Yeah, for sure. Like soon after, it didn't take long until you got me on board and purchasing property. So even it was hard to believe the first, but it was like a 3-bedroom villa in Queensland. I think the purchase price was $265K
in Brisbane.
Yeah, in Brisbane. And this, I guess, is a good example of. A lot of people, say to me that, you guys pick all the best property and, you get the best pick. But this is a property that how many people said no to before I sort of jumped on it. But
it was a bulk deal. Just for a bit of background, it was a bulk deal. There was 16 properties. We bought all 16. 2 people pulled out. You just came along last and go, okay, I'll take that one. If I have to, I'll take it, right? And then, so you bought that for $265, and what did you reval it for, and how long did it take?
Yeah, so it was like a 6-week settlement, so obviously just waited for it to settle. Got it revaled that same week of settlement. The reval came back at back in at 361. So I almost had to pay
100K
higher. So able to pull out that equity and onto the next.
So you got back more than what you initially put in.
Yeah, pretty much. It's weird. You just get your deposit back in 6 weeks. So it was hard to believe. And you asked me sort of that day, how's it feel? And it was just sort of a bit hard to believe.
Yeah.
Like people work years and years just to save up that amount.
Yeah.
And you pretty much just get it from property in that short amount of time.
I said to Hayden, like, I'm gonna bash you if you don't buy one, right? Something like that. I said something like that. I'm gonna bully you.
Those words.
I'm gonna bash you if you don't buy one, right? We don't use force around here, but it was just like, you just buy it, right? What is it? What do we get? What do we get for our...
So, I mean, you're the best to explain. I'm not sure how much detail, we should go into it.
We won't say location. It's in Sydney. Let's use that. It's in Sydney. It's a bulk deal. It's a liquidation sale.
Yeah.
Dodgy developer built it.
Yeah.
It has issues attached to it. The price of what they sold. Did you get a 1 or a 2 better?
I got a 1 better. Yeah.
One better?
Yeah.
I've got a 1 better.
Yeah.
What did we pay for them?
So the 1 betters were in the end 363K.
363 in Sydney.
Yeah.
What were previous sales for 1 betters in the...
They were 650, 700s. Well, it's up price for getting that. Yeah.
In 2024, still at the moment.
Yeah. So literally half price of picking up that. And I think you called it your favourite.
It's like one of my favourite deals.
Yeah.
Yeah, it's like one of the favourite deals. It's like it's ugly, right? Like it's got a special levy that'll come through 20 grand, 30 grand, 50 grand. Like when I sent the email to all our investors, I was like, this deal's shit, right? It's got a dodgy builder. Like I've spelled it out really clearly to everyone. 8 mile. I am white, I am a bum, I live in a trailer with a mum, right? What are you going to say about me now, right? That deal, I have to share with everyone what the deal had is wrong with it. And it's in a premium growth hub, blue chip location. Yeah. Your friend bought one down the road.
Yeah.
How much do they pay for theirs off the plan?
100K
off the plan. Yeah. Brand new. Like this thing's like 2 years old, 3 years old, 5 years old. Like premium spot.
Yeah.
The 2 betters were like 420, 425, something like that. I can't remember.
Yeah, I think they're only 413 or something. Yeah.
413. Yeah, there we go.
Yeah.
413, and then we've got a valuation and haven't settled yet from a big 4 bank for 955 for that.
Yeah.
So it's like, that's cool.
Yeah. Sets you up, doesn't it?
It does. Literally, like if someone, like if you could buy that property, I don't know if I'd spoken to you about this. I just like buy the damn thing, right? Like,
I can help you.
Yeah, we're neighbours. I bought it there too. Like you might have to pay 50. It's called 50K special levy. You can do it for like 400 grand. You can't buy in this location for 700 grand.
Yeah.
So if we can pull out 200 grand equity, like you started with 80, you bought a property, you got back 100, you buy another property, you pull out 200, you go buy another 3 or 4 properties. Like it's really setting that base up.
Yeah,
so,
for sure.
Yeah,
for sure.
So when I say to everyone, we're doing the same thing, people go, I'm going to go, who can I talk to about a buyer's agent? Like 10 years ago, 15 years ago, I told people what a buyer's agent was. It was maybe half dozen people that were buyer's agents, right? And I consider them to be good, genuine people, like lot of love out there. They know who they are, that have been in this space for a long time. Nowadays, like people like literally getting side gigs. They get like, be a buyer's agent, they go to a buyer's agency course, they get a little certificate, right? And then they're out there slinging deals and they don't know what they don't buy property, don't own property, nothing.
Yeah.
Like within, 2 months, like last 3 months, 4 months, whatever it's been, you've bought 2 properties, right?
Yeah.
You've been with them for like 8 months, right?
Yeah.
We're going to get to 10 properties in the next year, 2 years, 3 years, and we're living the what we preach. Like no one else out there goes, oh, I bought 2 properties this week, and I'm going to buy 10 this year.
Yeah.
Like you're building your portfolio, we're building our portfolios. We're all in the trenches doing the same thing, and the properties we buy. And so probably literally the 2 deals that you bought have been bulk deals.
Yeah.
There's been 15 other people buy in one and 27 buy in the other.
100%.
Yeah. So we're in the trenches with them.
Yeah.
Anything else?
No, I think that's it. I think just the bulk deals, I don't know if you want to expand on it more, but that's been a really good thing for us. That we're getting a lot of really good prices just through bulk deals at sort of wholesale prices.
Yeah.
So it's been really strong for us lately.
Yeah, I did some videos on the other day, but maybe we can go into depth about it today. What is a bulk deal, I guess, is where, you're going to have institutional investors come in, all those big stock listed companies coming in and buying these big buildings, and you never get a chance to have a bite of the pie. I guess we go in together and collectively be able to negotiate by buying in bulk, and that's what gives us a discount. And we're buying stuff that's 20% below market, or you just pulled out all your equity again to go again. These deals are wholesale prices. Like, yeah, they could be a liquidation sale. Yes, you have to move fast. Yes, there might be a situation attached, or yes, there may not be a strata set up today. But the opportunity, no one else out there, like in this whole space, I don't think it's possible for people to be able to connect. Like in this last deal, there was 27 people. They have to exchange the deal on the same day, pay their deposit at the same time, all go through the same lawyer, all have the banks have to come together. So out of the deal, you'll have one seller, you'll have the seller's solicitor, you'll have that. So you might have 3 people at settlement day for the seller. But from our side, we've got 27 buyers, 27 banks, right? There's at least like 50, 60, 100 people coming to the table on a settlement day. People can't pull that shit off normally. And I guess the first time I pulled this off was maybe about 13 years ago, 15 years ago probably, and done many of them. But the last few years hasn't allowed for bulk deals to occur because liquidations and flow of funds was, there was a lot of funds out there and people weren't going broke. But in this market, the cheap properties that we buy, like the individual properties, that market's booming. You've seen in the last 6 months, things that were buying 6 months ago at 150 and now selling for 250. Yeah. Everyone's doubling their money and it's great. But for us to buy in that space, it's like, okay, there's a bit cooked there. But we've got the opportunity to go buy the big stuff, break them up into smaller pieces, and everyone gets to buy at a wholesale level, and that's where the bulk deal comes in. Yeah. See, here's a little sales glitch in the middle of it, right? Break to the ad break, right? If you are interested in bulk deals, because people are writing, hey, how do we get a bulk deal and stuff like that, you have to register for it. You can speak to Hayden and the team at Investor Relations team. Email the team at admin@binvested.com.au and register your interest. You have to register interest. These deals go within like an hour or 3 hours or 5 hours, depending on the deal and the size and all that. They're all gone straight away. We don't have to sell them. Like when we give them away, someone puts down 300 and it's valued at 600 or whatever. Like we don't have to sell anything, right? Like these things just go. So you need to register your interest on that front. But the bulk deals are cool.
Yeah, for sure.
Yeah. I think they're going to be a hit for a while, but it might even be like a year glitch or something, but let's take advantage of while they're there. So. Cool. So I guess like you've had the experience working in real estate as a real estate agent. The intricate parts at the back end, right? Like what would you have seen as a real estate agent like deal? What would be the most common thing that a deal would have fallen over for as a real estate agent, do you reckon?
Well, there's always finance, but another big thing is just like building and pest inspections. People get these sort of high standards of, the property has to be perfect and, they can't everything costs way more it doesn't to fix it than it actually does. But probably those two things, building and pest inspections and finance. Yeah,
I always joke because when I get a pest and building inspection, I used to every day, like we've got processes in the business now which go through all these, but I used to literally watch and read at 2:30 every day. An alarm clock would go off in the afternoon and I'd go and read through all the last day's worth of pest and building inspections and read through every part. I joke about it because it's like they just copy and paste the same template.
Exactly.
Yeah.
They do.
And it's just, I look through thousands, like 10,000 pest and building reports over the years, and I'm like, this is like a copy and paste the template, and it's like the perishable flange pipe at the back of the toilet, and it's like, who cares about it? It's nothing, right? But you can freak someone out, and they get scared and run off.
They put horror words in there. They have to pick it up technically, but
they have to put it there to put it for their insurance for professional indemnity.
Yeah, for sure. Yeah.
So I guess. Maybe to start off with, like with the broker and finding the right broker, you've got clients that you've got, in the last 6 months, you've got 6 properties from, sort of thing. Yeah. How like, what are some of the things when it comes to finance that are crucial that people should be looking at to make sure that they're protected and they're able to build a portfolio?
Well, I think a big thing is get a broker that is sort of, I guess aligned with your strategy, our strategy as well. Like a big thing is obviously, start with a 20% deposit, just to help with the overall cash flow in the long term.
Yeah.
And then, I think that will sort of set you up because you're always looking sort of 5 steps ahead.
Yeah.
You don't want to, start with a 5% or 10% deposit.
Yeah.
And then sort of get caught because your outgoings are too much.
Yeah.
So a broker that's aligned with that and obviously aligned with our strategy that's, not fixing interest rates.
Yeah.
That's a big thing as well. People get stuck on, fixed interest rates and sort of have their hands tied for a while.
Yeah.
Not be able to do anything.
Yeah. There's a lot of things where brokers, it's just to see if your broker's dodgy, right? This is just a real simple tip for people if they want to see their brokers a bit, got their own vested interest. So how mortgage brokerage works is a broker gets paid like a 0.065% of a thing, right? There you go. All the mortgage brokers are like, don't tell them what we're getting paid and shit, right? They all get paid the same. Some people go, my mortgage broker pushed me towards this loan. They're getting paid a bigger commission. They're all the same. It's just a flat line commission from all the banks, right? So it's a 0.65% brokerage fee. So it's like 65% of 1% is the upfront fee. So a broker will quite often try and sell someone to go to $1 million property at 95% LVR, then do a $250,000 property at 20% deposit because they get paid 4 times the amount of commission for the same amount of work that's done to the deal. So brokers are always trying to push that. But if you refinance your property within 18 months of settling the deal, then the broker loses their commission. Yeah. So the broker will generally push for a fixed 2-year fixed rate, right? If your broker's pushing for a 2-year fixed rate, it's generally because they're trying to sandbag their commission in so they don't lose it a year later. Because if you could be with them for a year, then they have to pay back a commission in February 25 because they did a loan today. So just little things to watch out from your broker, and you want to make sure that like they've got the capacity to, because like to do what you want to achieve. Like should be asking anyone in your team, like how many clients do you have? Well, whether it's a buyer's agent, how many clients this year have you got to 10 properties? How many have you got to retirement? What's the average cash flow for one of your investors when they retire? How many, if you're a mortgage broker, how many clients have you helped get to 10 or more properties? If they go, 10 properties, you can't do that. It's like, well, how are they going to? Like, you're going to be their first case. So,
and I think a good part about using a broker that you trust as well. If they do hit a brick wall, make sure they don't just retreat and turn back. Make sure that they know it's absolutely impossible. If they can't do it, then it's not possible.
And a lot of people get turned away. It happened to me many times in the early days. You can't do it. It's like, oh shit. And then it's like finding the next person that can help you out. And it's just, how can you break through that barrier to get to the next level? And if you're not comfortable with the answer, then keep searching for that. So cool. And I guess, most people think that a broker or a bank, one bank isn't going to necessarily get you to your whole portfolio. Like back in the day, like if a bank was to give me loans and go, okay, I'll lend you for 20 properties, okay. But the day that they stop lending, then that's when you got to look elsewhere. Nowadays, given all the control around, responsible lending and the banks have all these parameters, one bank just won't get you there. So you need a broker that's going to have a suite of them, of lenders. What other options have you seen that's been advantageous for our clients?
Well, just the options, that our broker is using, second, third tier lenders to be able to get them, the property. Just because one bank says no doesn't mean, there's not a bank out there that will let you, get that property. So, and don't be loyal to banks either. I've had clients that, have been with CBA for 10 years and, want to stay with CBA. And, if it's a difference between getting the property or not getting the property, you've just got to think for yourself and do what's right for yourself and not be loyal to any bank.
You like they say, like you're a number to them, like literally you're just like a digit to their mortgage-backed securities that they're wrapping up, bundling bonds and selling you on to selling those bonds off to another investment firm cool. And on that note, like I've seen some of our clients have recently, like they might be working for 20 years in a job and then suddenly they'll go and become a contractor working at the same place. And up until now, the bank says, no, well, you've got to wait 2 years and provide financials. But out of the second tier lenders, there's a few that'll be like, okay, we'll work with a 1 day ABN, so you can get a loan immediately after 1 day of setting your business up, rather than having to wait 2 years. So there's lots of alternative options, and an extra percent where you pay 200 grand property, 1% extra, 2 grand a year. 1 year you go and refinance out. What's an extra 2 grand or 3 grand or whatever? So cool. And any other thoughts on finance or anything like that?
No, I think that's covered most of it.
In your real estate career, you've seen good times, bad times. You've seen how agents behave when in a good market and bad. What for you would be considered a good market or a bad market? Like, what would you consider that to be?
Well, I mean, in the real estate game, we just sort of base, I guess, a good market on the numbers of people at the open homes, the amount of sort of offers and whatnot. And I mean, a bad market would be the opposite. No one turning up at auction day. Prices not hitting reserve, or vendors having their property on the market for months on end. So I guess it's sort of based on the outcome of numbers, but there's so many different markets, like within markets as well. So just because a market's good in one area, it doesn't mean it's good in another, and vice versa.
This is a totally random question. Like I know you got lots of mates, because I've made inquiries that they're like, right? We know people, and so in the area where we are in the Hills District, I haven't asked anyone this, but I've seen signs sitting a bit longer. What's your understanding of the local market here, where we like in the Hills District? Is that hot still, or is it soft still?
I guess it's sort of a middle ground. Like things are selling at a good price, but they're generally taking longer to sell. So people are just having to wait out and build the price, and not many sort of as active buyers as there used to be. But I think that's just because of rates at the moment. People sort of want to hold out until they think they're going to drop and whatnot. So it's just a bit of uncertainty, I think, in the area.
So that's like the average price that we're talking here is like 1.5 million. Would you say?
I'd say 1.5, 2 mil.
But when you see, so that would be a soft market. Like, it's not a dead market. I've seen dead markets, and it's definitely not that. The market's still very active, but I do see things seeing longer. I've seen like in Kellyville, for example, record sale prices coming through. It's insane. But that's inflation for us. But when we look at the deals that we buy, like, how often do I come to you with a deal, and like we've located the deal, we've negotiated it, we've presented it, within an hour of me presenting it, someone says yes to the deal. We get them a contract, they pay a deposit, so 2 hours might pass. What happens half the time?
We lose it sometimes in that period.
Right. So the market, like in some of these areas, like we've seen them go up. Stuff that I was buying last year for 150 is now selling for 250. And the buyers, like, it comes on the market, and it's like seagulls eating your chips. All those koi, the carp in the lake, when they come to the edge of the lake, and like, right? There's so many, so many people there. So we don't want to get caught up in frenzies, but there is a hot market too. So it's different sides of the.
For sure.
People just look in their neighbourhood and say, "Oh, this is what's happening." But there's areas. Whilst there's markets in Australia which are going up, we know markets that are going backwards, and we can pick up cheaper in 2024 than what they were in 2019 before Corona. So I guess what. Like if we put the real estate agent hat on, a tough market would be no buyers out there. For us, the tough market's that there's too many buyers out there.
Exactly.
It's the opposite. Right?
That's right.
What sort of tips do you reckon, or things people should look at to be able to stay more motivated or more focused in a tough market, whether it be either side, up or down?
Well, I think just try not to get, within that time period, like you were saying, a lot of people get like analysis paralysis and sort of overthink, a certain property, just get stuck on minor details, about the look of the property, visually. But try not to get sort of too caught up in the detail of the property. Just look at sort of the numbers and what it's doing for you. Because that way you'll be able to make a fast decision and not sort of lose, that many properties. Because you look back at them in sort of 3 to 5 years time, and the properties that you're going to buy doubled in price, and you're sort of too caught up in the detail at the time.
I spoke to a client today. I didn't even say to him, but this client came on board in 2020, and I sent him like some properties and said no to all of them, didn't do anything, but it's now like coming in and going, I want to buy, right? Yeah. And I felt like talking about like, do you remember those ones I sent you a few years ago? Why didn't we take them, right? Yeah. Why didn't we take them? But it's important, like whether you buy the deal or don't buy the deal, I think in your research you should still revert back to those markets and, you know, observe and see
what happened.
Yeah, what happened.
Yeah.
So, cool. And I guess one of the things that we always, you know, get asked, and sometimes people say, oh, Birchy talks about these cash flow positive properties. I need it to be positive $20 per week. And they get it wrong because they're just focusing on one thing that's, you know, you need to look at all of it. Cash flow versus, you know, capital growth. What's your take on that? Thoughts?
Well, I mean, it just comes back to you've got to have the right sequencing as well. Like it's got to be the right, you know, step in your portfolio, which one you sort of want to go for, or a balance of both. Yeah. You know, one person, you know, might need, you know, a more sort of cash flow based property to sort of build up this sort of foundation of servicing to look good for the banks to be able to get to the next step in another property. Yeah. You know, or if you're in a good position financially, some person, you know, might want to go for a more growth focused property so they can pull out equity as soon as possible and go again and sort of rinse and repeat. But yeah, it's very important to get, you know, the right balance of it across the portfolio, because then you won't be able to build a large portfolio.
And do you think you can have it all?
Well, I think it's possible. Yeah, it's possible if you ever make the right moves, have the right team around you. It can be hard at times. Yeah. But yeah, it just comes back to the sequencing of, you know, what step do you want to take at that time and get the sequencing correct.
I guess on that front, like you've bought in Brisbane in a hot market and bought way below rebuild, way below price. The cash flow on that would be positive as well. Yeah, it is. Yeah. One in Sydney will be positive. Probably a little bit because of the strata and that.
It is. So they're both a good balance of both. So definitely positive.
Cool. And I guess, you know, expectations, like people come in and they have a thought of something, and then the reality is, you know, can be different. Like I guess managing the mindset of, you know, of that. Do you have any thoughts on that?
Well, I think it's a good one, because I had a client that sort of came on board and said that they only want to sort of purchase properties that, you know, they would live in themselves. Yeah. So I think just sort of managing your expectations of, you know, everyone needs a place to live. You know, don't set your standards too high. You know, if it doesn't have, you know, floor to ceiling tiles in the bathroom and you know, these you know, stone bench tops and everything like that. But you know, the property won't be perfect. You know, it will have you know, its challenges. You may need to fix, you know, a thing or two down the track. Yeah. But yeah, I mean, I've had clients that accept properties, you know, just based on the cash flow sheet. They barely even look at the the photos. Yeah. So I think, just try not to get too emotional about it, and just look at the properties, what the property's doing for you in your portfolio, and where it can take you. Yeah.
I guess when you look at like shares, for example, right? Let's say we go and buy shares in pick a company. I'm just going to make it up because we've got the Woolworths head office near us here, right? Like, let's say you go buy shares in Woolworths. If you're to buy Woolworths shares, do you look at the financial statement, or do you go and look at, you know, all the stores, right? And most people get emotionally attached. That's why most people don't make money out of real estate. But you need to look at it from a numbers perspective. Like, there's Woolworths stores that are being neighbourhoods covered in graffiti, right? Yeah. Would you not buy Woolworths shares because there's ugly Woolworths stores? You know, exactly. Those sort of things need to be factored in. So. Cool. And what sort of, when we talk about the numbers, what do you think most people should be looking at, and the, you know,
in terms of sort of the rental yield, or in terms of,
like, we have people that come and say, I wouldn't live in the property, right? Like, I wouldn't live in 3/4 of my properties, right? Probably 90%, because you know, as time has grown by the expectation of life, right? Yeah. But I wouldn't live in the properties that I'd buy. Like, what are some things that you could give us tips for people to be like, look at from a different perspective? Like, you know, look at the numbers. How do they?
Yeah, for sure. So I mean,
metrics.
You know, for example, I mean, if a property's, you know, if you're stuck in your current position, and this property is bringing in, you know, an extra 25k per year, you know, the banks will look at that and look at your income as, you know, 125k. It may, you know, let you get to your next property. Yeah. Which will, you know, let you bounce through your next property using that equity. So it's all about, you know, treating the property as a vessel to get to your next one. Yeah. So
the one I did for 115 grand today, right? It's like we're talking about Sydney stuff, we're talking about Brisbane stuff, we're talking about Perth and Melbourne. This property that we picked up was in a regional location, right? And I sent it to a fair few people. The person took it was like, that's amazing, right? I want to take it. It was renting for $300 a week. It's like 115 grand. You can't build shit for that, right?
Yeah.
Go and scoop the property up, put it on the back of a truck and drive it somewhere else and sell the building when you get to the major city, right? The next closest major city, dump it off and you get your 115 grand back on it. But people are too caught up on other external factors. And it's like, looking at the value of the intrinsic value of the asset, I think is important. Looking at the cash flow that's being bought and looking at how the risk has been removed from being bought below market value, I think that's really, crucial for everyone to look at. So,
sure.
And I guess in like your real estate career, like you would have seen, like because you're in sales, did you ever have any stint in property management or anything like that?
No, not really. They sort of existed within our office, so I sort of saw, heard them on the phones, all these tenant complaints that they deal with, all the fun stuff. So.
Okay, you're well known in the local community, so I'm going to ask you about like intrinsic sort of things about, what would have happened inside your business or whatever that you worked for previously in real estate. But like, you're right, like when you say like tenants coming to complain, like I've Blink Property, I set that up 12 years ago now, and let me tell you, that's one of the most draining businesses that I've ever had, right? I've got lots of businesses. I talk about, properties and stuff. I've got different businesses. And do you know I had a Chinese restaurant?
I did.
I do, right?
I didn't know that.
Right? Sold Jim Sims and Chico rolls and shit, right? Special curry prawns and rice, special number 16, right? I've got different businesses. Some are cool, some are not so cool. And like property management, when I set it up, I was like, this is cool, right? But after I set it up, I employed my favorite property manager. I realized that there was ones that are pro-tenants and ones that are pro-landlord.
Yeah.
And I set it up. And then I realized that all it was is just a big pile of fucking headache, right? But the thing is that, and the reason why I kept pushing forward with the business is because I need to protect my owner's best interest. All our investors, we need to make sure that they're getting the maximum cash flow for their property. I was on the phone to someone, he's probably going to be watching this, and I was talking about his portfolio. He's been with me for like maybe 15 years now, and been doing this so long. His little kid that was like 5 years old is now buying properties onto his second one, right? He's 18. He was 3 years old, whatever. I don't know how old he was, but he's 18 now and he's bought 2 properties. But I was just chatting to him. He said, my property manager's shit. And I was like, okay. And he was with Blink, and then he went elsewhere, and then we're talking about coming back. And I was like, how does it compare, right? How does it compare? And he's like, mate, he goes, it's tough out there, right? The agents don't come back to me, looking after the tenants, all that sort of stuff. Yeah. So as a business, like, you have to get it right, like the processes, the systems. And I think, confidently I can say today that it's taken me, probably took me about 8-9 years to get there. There was fuck-ups along the way. But the whole industry of property management, you cop abuse from the tenants. You got to put the hat on to get the tenant. Then you got to put the hat on to be the debt collector. You got to put the hat on to say, no, we're not spending the owner's money. A lot of property managers will try and, okay, I'll go to the owner and get him to put a new aircon in for you. And, it's, this guy I was talking to, he's like, he's owned the property for 15 years. I didn't say this to him, but you'll hear it you'll hear me my thoughts when I say it here. He said his property manager sent the handyman around to put fly screens on all the property. So you've owned the thing for 12 years or something. Why do you need to put that on? But sometimes it's easier to get the tenants happy. Yeah, correct. Yeah. To spend someone else's money. Yeah. Which, you need to manage that too. What are some of the things that you've seen over the years that's good for, you come from a very good office before coming here. What are some of the good things that, that a good property manager could look after? Yeah, I think one of the most important things is just, as you said, staying on those yearly increases of rent. Yeah. You just got to keep, on it each year, because, once you sort of leave it for a couple of years, you leave it for 3, 4, 5 years, and then all of a sudden you do this, $100 a week jump, then you find out you lose your tenant pretty quickly, and then you have to sort of go on the market again and go through that whole process. So I think increasing it, slightly each year is much better than, waiting a couple of years then doing it. You just got to be proactive with it and make sure your property manager is as well. Yeah. Being proactive, like I look at, so I have this rule which, we've got, just in Queensland, we've got like, I don't know, let's say 50 staff, right, across Queensland. And those property managers, like, they have their strengths. Like some are very good at ingoing, some are very good at, you know, doing the routine inspection. Some are, like, everyone has their strengths. And I looked at like some of them and their rent increase advice. I was like, there's inconsistencies here, $20 here for this one or whatever. So I've made this thing where I wanted to coach them, and every month I get them to send me their rent increases before we do the rent increases, and then I give my recommendations on those rent increases. And I try and treat it more like a hedge fund more than anything, because I'm like, $20 extra rent to the real estate office is really nothing, right? It's like, let's say you pay 10%, right? It's like, say 7.5%. That's like $20 is like $1.40, you know, a week. It's nothing. And the real estate agent that's managing it, if they put 1,000 rents up by $10, $20, they're gonna have 1,000 tenants complaining, right? But they're not going to get anything from it because it's just they don't get paid for it. But the way I look at it is, if I've got 1,000 properties and I put the rent up by $20 a week, then I'm getting $1,000 times $1.40, so $1,400 a week. So the direct correlation between the investor's goal and, you know, our goal is very much aligned. But most real estate offices don't sort of act in line with it. They just they
don't want to make the tenant upset. They don't want to bother with it.
Leave the tenant, and the next minute you've got rent at 300 where it should be 700. And so cool. And what other things could you suggest to people? Like, you know, you buy a property, like what happens after that? Like most people buy one property in their life, or two properties, or one every 2 years or whatever. We're buying like 10 a year. And what sort of things do you think?
I think just keeping up to date with the market and where it's at. And because even I think you had a phone call with a client the other day that you know, they thought their property was worth 150k and it was actually worth, you know, like 250k, 300.
Yes.
A lot of people don't know what they're sort of capable of and how much they actually have to sort of play with and sort of have access to. So keep up to date with sort of the sales and you know, get valuations if you need to do it to sort of get an exact idea. But you'll be surprised with what you're capable of and how much the property has actually increased by.
I forgot about that one, because the guy came to us. He had like 2 properties that he'd bought himself, and like maybe 4 that he bought from us and or through us, and our ones were like 150, 200 grand, and the ones that he had were like 800 a mil, and they were draining his cash flow, and he was selling the others off. And I said, before you sell it off, like, you know, don't get too caught up on, you know, that. Let's look at what you've got already. And I told him, like, the one that he settled at Christmas, it was in Western Australia. We paid like 170 for it, 160, and I was like, the cheapest thing just sold in the same complex for 299. Let's go pull equity. He's like, nah, surely it couldn't have done that. I was like, no, it did. And we're in the process of doing that now. So that's cool. And I guess like expectations, like sometimes people come to us and they're like, you know, I want to get positive cash flow, I want to retire. Like some people think they'll get there this year, right? They've got no property, they're going to retire with 250 grand. They're on 50k a year and they've got 20 grand savings, and they're going to get 250 grand a year magically coming in at the end of the year. How do we, like, what's realistic when it comes from that perspective, and how long should it take, and does it take?
Well, I mean, it can be subjective. Like, it depends, you know, obviously how much you start off with, you know, your income and whatnot. But we're in it for the long game. You can't sort of have the mindset of, you know, thinking it's just a quick turnaround, easy money. You'll be retiring in sort of 5 years when, you know, you're just getting started. But it just comes down to sort of how much you know, capital you have, you know, how much you're earning, you know, how much you're servicing with the bank and whatnot. But in a lot of people's positions, it can take, you know, up to 10 years to get where you want to be, and to sort of reevaluate, you know, from there.
I think, like, we don't have, I reckon anyone that you've ever sold a property for in your whole real estate career would have been happy on the day that, like, I bought a property for 500, I sold it for $1 million. Thanks, Hayden, you made me $500,000. Go on. And then 3 years later, they're like, shit, I wish I didn't sell that thing. Now it's worth like $1.5 million.
Always.
It always happens, right? So you want to control that asset. You need to accumulate the asset, but you need to have the cash flow to hold on. And most people don't structure it enough to be able to have enough cash flow to hold on for years. So holding on to it and generating that cash flow. So there's like sort of like 3 phases where people go through. One's like the education, where you start building your strategy, start building your business plan. It might take I got this mate, right? He's like one of my best mates, and some people know him. He's, I won't give too much knowledge because I don't want to identify the person. But when he started, it took him like 3 years, just researching, reading Rich Dad, Poor Dad, all that. And then he's like, oh, I'm going to buy this and do this. And the strategy sounded okay, but it was flimsy a bit, right?
Yeah.
And then after 3 months of us hanging out and stuff, he went and bought like 10 in a year, and then he got 20 in the second year. He got like 70 or something like that. And like the education phase is really important. Get your game plan right, because it's easy to fuck it up.
Yeah.
Like if you buy the wrong thing, you spend a decade of pain. Once you've got the education, you've got your plan of, okay, I need to get to 10, I need to get to 20, I need to do 15, whatever it is for you, then it should be all about accumulation, getting those assets, right? And that's the part which seems like the most fun, because it's adventurous, right? Getting 10, getting this, do this, pull an equity. And then sometimes it's like, should have got 20 properties, and then the tenants have whinged about this and whatever. But then it's like, okay, now we need to consolidate and go, how do we pay out that debt? How do we eradicate the debt? How do we increase our cash flows? What sort of things we can do? So that's the consolidation phase of the journey. So 3 parts to it. What party are you going into, and how long does it take? And we've got people that have bought a property once every 3 years for the last 15 years. Got a handful of properties. They're cool with that. We've got people that have got 20 properties in their first year. I've got people that have got no cash flow because they just want to buy a specific type of property that's is cool, but it's like, it's not, I can't tell everyone this is what you should do, right? People take their own journey, but some people get 100 grand a year in their first year, but what are you coming to the table with? Where is your starting point on the journey?
How aggressive do you want to go? And
cool. Any final tips?
No, I think we've covered the majority of it.
Yeah. Cool. Awesome. Well, we'll have you back soon, and thanks for all that you do for all our clients. And it's appreciate you coming on today, sharing your knowledge.
Oh, thanks for having me. That was good fun.
Congratulations on your second property.
Cheers.
We'll follow the journey.
Follow along.
See if you can raise Hayden. If you want help on building your portfolio, reach out to the team, 1300 367 925. Email us at admin@binvested.com.au. If you want to speak to Hayden, reach out and say, hey, I want to speak to Hayden, talk to, have a chat with him. Make sure that you subscribe, share us around with your friends and family, and follow us every Thursday. A new podcast drops on Google Play, Apple Play, Spotify, and YouTube. We'll catch up soon, folks. Have a great day. Bye for now.
Like Bilal said, man, we're stuck in the matrix. This my advice, don't care if you take it. The dollar back to die, soon to be hyperinflated.